Welcome, everybody, to another episode of the Good Deeds Known Investing podcast. I am your co-host, Jamie Bateman, joined today by my fellow co-host, Chris Seveny. Chris, how are you doing today?
I'm wonderful, Jamie. How are you? It's Friday.
Doing well.
So, did you like my dancing penguin?
Yes.
Okay. I was going to say, Did you even not see the dancing penguin?
I think I was doing something else. Luckily for the listeners today, it's not just the two of us. We have a special guest, Dan Deppen of Fusion Notes and the Note Investor podcast, and we'll get into all that stuff later. But Dan, how are you doing today?
Man, I'm doing well. Good to be here.
Nice.
What's the weather like out west?
Well, up until New Year's, so I'm in the Denver area. So up until New Year's, we didn't snow. Basically, it didn't snow until like almost the very end of the year. Mm-hmm. And then we've had snow on the ground like since the beginning of January now. So it just kind of flipped. But this week it started to get back up into the 50s. So it's warming up a little bit. But it was minus 12 at my house one day about a week and a half ago.
Ooh, wow. Did you get any late season golf games in with the lack of snow?
Yeah, I played all the way up through December. So of course we had like the summer Tuesday league. Mm-hmm. And then some of the guys kind of like informally keep it going. Mm-hmm. And we went all the way to like December 22nd or something like that.
Now you're like a scratch golfer, aren't you?
I'm a 2 right now. I've wandered between like 2 and +1 over the last several years. Yeah, but I play a lot of competitive golf and stuff.
So
awesome.
Dan's being modest. So
he's really good.
I do military style, left, right. So it's my golf game.
I do VR golf and that's it. No.
So I did buy a new house in the fall, and one of the key requirements was having a basement ceiling tall enough to put a simulator.
Oh,
so nice. I got a full simulator in my basement. So while the snow's been on the ground, I'm still playing.
That's awesome.
Yeah.
So I haven't played in a while. I used to golf before I moved down to Virginia and stuff, but had an issue with my hands at a point in time from a medical issue. But we just joined a sports complex. And they have like 8 simulators, and they have weekly golf leagues and stuff. And I'm like, oh, this is once things settle down a little bit, I'm definitely know where I'm going to be at least 1 or 2 nights a week. So.
Yeah, we have one of those here. They call it the sports stable. It's got like multiple hockey rinks, golf simulators, and basketball, like all kinds of stuff. Yeah.
I should probably get into golf since apparently badminton is just too violent for me. But anyway, moving right along.
Get hit with a racket.
Jamie tore his Achilles playing badminton, so he's.
Well, I once lost
it's a manly sport. You did what? Lost a tooth?
I lost a tooth on the golf course. It was about 40 degrees in the morning, and I had this power bar that was in my car overnight, and I bit into it. Yeah.
Gotta wear a mouthpiece next time.
Yeah.
That's funny. So Dan, putting all that stuff aside, I know a lot of our listener base is likely familiar with you. I know you have a pretty big following. You've got your own podcast, like I mentioned, and so we don't need to go too far into your background, but for the listeners who are unfamiliar with you, do you mind kind of giving us a quick synopsis of who you are?
Yeah, so I started my career in the aerospace industry as a mechanical engineer, and then later did an MBA, became a product manager. And then when I was like 19, I started buying stocks. I was always interested in investments and analyzing them. So I did stocks, and then I got into like options for a little while. And then I reached a point where I wanted to put money in real estate. And then I looked at rentals, and then even several years ago, the market out here in Denver, like the math on rentals was pretty tough. It's probably not any better now. And so I was looking for other niches. That's where I found notes. And then I really just ended up kind of going down the rabbit hole and getting way into that. And then started buying stuff, like grew business pretty quickly, did it full time for a couple of years to get it, really like up and going. And then, now I'm back. I've got a product manager job again, but I still have the notes business. So I kind of have 2 jobs, but I've got one employee who runs a lot of the day-to-day. And I was big on building like systems and processes for all this stuff. One of the cool things about notes is they can be kind of rinse and repeat. Like every note has its own nuance and you know, I've got my share of like wacky stories like everybody else, but you know, the basic process and flow is, you know, tends to repeat. So it felt like if I could systematize that stuff, then you could,
Yeah,
you know, scale and not get bogged down.
I definitely want to get into that as far as I've heard some of your stuff before as far as how you systematize and things like that. I'd like to get into how you've changed over the years, what you've tweaked and what's worked and what hasn't worked. Anything that you want to mention there?
It's definitely evolved. I think so. I started with more standard processes. So what I've got is I use a program called Confluence. It's just like an online wiki you can set up. So I have like these little kind of like wiki articles for everything. So it's kind of like, okay, here's how we do due diligence. Here's how we do different things. And then a lot of stuff I do on a regular cadence. So like one of the things I do is every month have my assistant go through the whole portfolio and see like what payments were missed. Some of them you kind of expect because it's heading to foreclosure. Others are surprises. So I can like intervene early. And then and I've got some other things I do on other cadences. Like every 6 months, I started just pulling tax reports on all of them just to prevent, because I had one where, you know, we go through periodically and keep an eye on taxes. And I had one, I'm not sure exactly what happened, but it got away and like almost went to tax sale. And I'm like, okay, we're going to have this other process to make sure that that can't happen.
I'm curious, and then I'll let Chris jump in because he's always chomping at the bit. But I've heard you say that about checking the payments once a month. And I'm curious if that was always the case, because Chris and I have talked about this on our show. But you know, when you start out, I don't know about you guys, but I was pretty much every day logging into my
that's what I was going to say.
I did that too.
My portal and seeing my 3 loans or whatever it was. I'm like, nothing changed in 24 hours. Wow. But I spent way too much time kind of watching the pot not boil, I guess, or whatever.
Yeah, it moves too slow.
Yeah, exactly.
To do that. But I remember when I was 19, like I bought my first stock, I was doing the same thing, like getting a newspaper every day. And I'm like, oh my God, it went down 1/4 of a point. Like, you know.
It's like, okay, who cares? Yeah, but I think that's good that you you developed the discipline to not do that. And probably you reached a point where it was just impractical with the number of assets you're managing to log in every day. It just didn't make sense, you know, to the portal. But to do it once a month, it's probably frequent enough. So that makes a lot of sense. Chris, do you have any questions?
Well, I'm just going to hit rewind and play. And Dan just told my story of note investing. So thank you, Dan. But
sure.
Nice. But people should pay attention, because that is somewhat of the blueprint of you start, you're very involved. And then as you grow, you realize, for example, like same thing with my notes. We check them once a month, and the ones that are, of course, an active, you know, legal or whatnot, you know, things may move a little quicker. But, you know, for us, we do the same thing. We check them once a month. We stagger them because I also work full time. So we check so many per day over the first few weeks of the month. And then if we have to go back on any and so forth. But for example, we have at any point in time roughly about 250 assets. And we try and do 15 to 20 every day, which in the morning takes me about 45 minutes. And then through a week, you get about 75 to 100 a week. So after 2 weeks, you've gone through all your notes. So again, systems, and then you're a product, you know, manager and stuff. So you're same way with all your systems, and you break everything down into little bits and pieces. And by doing so, it allows you to systematize your business. And Jamie will probably want to talk to you later about hiring processes from that perspective, because got to take a little jab at Jamie on that one. Yeah, he's had some hiccups with his VAs, but
it's challenging. But
no, it is. But what I actually wrote down Confluence, because you mentioned like the wiki. And, you know, basically I'm like, oh, wow, that's actually a pretty cool idea of you're putting everything down. And I know you came out with a due diligence training and stuff. I'm sure you probably give that to your people as well. But, you know, creating.
Yeah. And the other thing I have within that wiki is lots of like little videos, like little snippets that says, here's how you actually do that. So if you have to bring someone new in, they can.
Yeah, that's one.
You know, it's pretty easy. So last fall, my assistant who's working for me, Wendy, who's freaking awesome. She got an offer she couldn't refuse from someone else because the market's just so hot.
Yeah.
But what was cool was she had built out after a while, like I wasn't adding to the wiki, she was,
Mhm.
as things evolved.
Mhm.
She had it really well updated. So when I had to hire someone else, she had a
Yeah.
good referral, and then that person was able to come in and kind of everything was there. So we've been just meeting up like twice a week,
Yep.
and she's gotten up to speed pretty quick. So that's been kind of nice. That's the other purpose of the wiki, is to you know, people can come and go for
Mhm.
whatever reason.
Yep.
It's nice to have everything like kind of documented. Then it's easier
Definitely.
anyways to bring someone else in if
No,
you
I
have
think
to.
that's a key piece. It's just,
Mhm.
it's really easy not to think ahead and just to think, because I've spent a lot of time personally on Zoom and just non-recorded calls and going
Mhm.
through training people, and then boom, and then they're gone. It's like, oh, so we've been instituting some more of
Yeah.
that, Loom and SOPs and that kind of thing, because don't just assume that that person's going to be there forever. They're not going to care about your business as much as you do, let's be honest. And things happen, people have lives. So yeah, that makes a lot of sense for the newer investor. I think it's really easy to miss that, just focus. You're so in the weeds, you're not thinking about what's my business going to look like in 2 or 3 years.
Yeah.
So speaking of business in 2 to 3 years, one of the questions I want to ask is, now we just finished Cash Flow Expo. I did a presentation on the, scaling your business and making it profitable and so forth. And as many people know, I typically like to keep things pretty upfront and honest and not try and overhype things.
Pretty honest, right? Just
So, well,
I'm just kidding. I'm
so
kidding. No, we keep it real on the show for
yeah,
sure.
and I know you keep it real on your podcast as well.
Mhm.
I'm curious, if I don't know if you were able to see it or not, but basically, you've been around probably about, you started right around, I think when I did 2016, 2017, I think
Very
timeframe.
beginning of 17, so
Yep.
about 5 years exactly.
Yep. So, you've been in this business for 5 years. How has it been for you to start your business, to buy the note, to scale, and then turn it into something that was profitable and then continue that success? Curious to hear your story.
Yeah, it was interesting. So I did catch your presentation, and you had this chart where I think you were showing a 4-year timeline to go from like absolutely zero to having
Mhm.
a profitable business. And at first I was like, that shouldn't take that long. And then I was looking back through my timeline, and I'm like, oh, that's like exactly how long it took me. And part of the challenge, right, is I spent I think it was about 6 months, watching like videos, podcasts, and talking to people. And it's really challenging because pretty much all the information you need is like out there someplace for free. Like
Yep.
you can find it, but it's not organized.
Right.
And so it's like trying to look at a forest, like, I don't know, it's a bad analogy, but it's like taking a soda straw and like trying to look at a forest and then go back and like put together like the whole picture. So that just takes a while. And then, yeah, you get into that process where you're buying stuff. I remember I was like really nervous buying the first note, and I paid too much for it, but it's worked out. I've still got it in my IRA. Like it's still making payments.
One of the things I'll mention about that is, and I think there's actually more assistance today than there was 5 years ago. If you were trying to buy a note and ask somebody, hey, can you look at this? Am I bidding this properly? I know you help a lot of people. Jamie does, I do,
Yeah.
Bill McCafferty does. There's a lot of, people out there who will provide some assistance. Back 5 years ago, there's really kind of only two groups. There was the Eddie Speed group and the Carson group. And, basically people would kind of fall, and there's, a few others, but from the primary, it's kind of like, politicians, those are the two. And there was a lot of education out there, but not that kind of assistant side of things where you could probably pick up the phone and call someone and said, hey, look, is this these numbers look right? And today, and again, maybe it's just, I didn't see it back then, but it seems like today there's more avenues to just pop a question and ask somebody, hey, does this look right? And have somebody jump in and give you a little more advice.
Yeah, it's definitely a lot easier now. Like the network has kind of grown from where it was. And I think that's part of why that ramp up period, could take so long, because the industry is so obscure and kind of small. But I just feel like if it can get to some critical mass where like more people are doing it, then the information is available, more people will get involved, and then you'll have more assets trading around. So
Mhm.
So, Dan, how much, when you started, roughly, how much did you start with? Were your first few notes? How much money did you invest early on?
the first one I bought was in my IRA. That was probably like a 20 or 25K note.
Yep.
Maybe performing
Mhm.
note. Yeah.
Okay. So, because that's another thing where in this business, there's that happy medium of if you have 5 to 10 grand, it's very difficult, but you also don't need, $250,000. Most people,
No.
25 to 50 is probably a spot where I'd say probably most people fall, or at least they're comfortable starting out with investing in, just because of you somewhat, jumping out of the plane, with a parachute, but not, doing it solo your first time. So sometimes you rather do tandem, but you also want to take that huge risk.
Yeah, and if you do the first one in an IRA, right, like you can roll over like a small portion
Mhm.
of your normal 401k
Mhm.
or IRA into something self-directed and buy like one note. That's one thing. Like when I rolled over money, I rolled over too much because it took me a while to get going. And then like I had a bunch of cash sitting there for a while. You
Mhm.
don't have to do that. You can
Mhm.
just, roll over like 25K or whatever. And then if you're just buying a performing note, that's probably okay. And you can roll over more later when you're ready.
So when did you get to the point, or what would you say to the newer note investor who hasn't worked with other people's money? What's the tipping point there where you might are open to or feel comfortable working with other people's money?
Yeah, for me, it was when I got to the point that I really felt like I knew what I was doing.
Mhm.
Like I had a process. I'm like, okay, I've got a business model. Like, everybody has their own filters and their specific things that they're looking for.
Mhm.
So I had a good understanding of like what I was trying to buy. I kind of knew at the time there was supply available for that. Like I had a model for doing pricing. I had done a number of these deals. So I felt like the
Mhm.
whole like deal mechanics I was
Yeah.
comfortable with, like that whole
Right.
buying process. Yeah, you
Yeah.
just want to do enough to where like you're comfortable that everything makes sense because you don't know what you don't know
Right.
when you get started. So you need like some level of experience so that because that's a
Yeah.
big responsibility, right? And it's weird
Absolutely.
that one of the big surprises for me was how easy it was to get outside money. Like
Mhm.
my limiting factor since I started doing that has just always been my ability to buy the right deals at the right
Mhm.
pricing. Like there's
Mhm.
always been plenty of outside money
Mhm. Yeah.
available. Um, so it's just a big responsibility if you're going to take that on. You have to like know what you're doing and then just,
Yeah.
ethically the way you operate your business. I'm sure like everyone's heard horror stories of people who took money from people and then did crazy things like throughout real estate
Right. Yeah.
investing.
I mean, I think it's an impossible question to specifically answer. I mean, because
Yeah.
it really is, it depends on your personal situation. But yeah, I mean, it's same for me. It's like I felt comfortable. I knew what I was doing. I had a real estate background, but it's still a little bit, it's exciting, but it's a little bit nerve wracking at the same time because
Mhm.
I take that,
Mhm.
like you said, it's a big responsibility and I take it very seriously. So I'd rather lose my own money than someone else's.
Yeah, exactly. Yeah, well, that was like the first one where I did. It was a non-performing note. It was kind of a different scenario than I had done before. And I'm like, well, I'm going to do this one with my own money. And it was a good thing I did because that one went sideways. That would have, I used to say on that one, like the only saving grace is I don't have an investor. But, one of my other processes too is like once a quarter, I go through and I do a lot of financial reporting. Like I basically rake through the books and I go like through every note to make sure everything is on track. And
Mhm.
like part of that is of a spreadsheet with like the balance of every note and where I stand. And so take a look at like all the
Smart.
investor money and what I owe. And it boils down to it's like, okay, to pay all the investors, you should have this much cash in the bank. And it's like,
Yeah.
okay, this is how much cash I do have in the bank. And I keep like real tight control
The
over
numbers
that.
don't lie, right?
No.
The books
So,
don't lie.
so here's a question I'll pose to the both of you. So Dan and I are engineers, and Jamie, you've been in the military and worked for the government as well.
I
So
started down the engineering path, but that's a
okay,
different story.
but between the three of us, our business careers really haven't been based off of sales and marketing. Okay, and typically engineers are known as the people you just kind of want to lock in a closet and don't let them talk to anybody or do any types of presentations. And between the three of us, we've raised, tens of millions of dollars. So what is the secret? I mean, Dan, you've got investors and so forth. I've got investors, Jamie, because a lot of people, when they get started, they start buying some notes with their own money and stuff. And then they're like, okay, how do I get outside money? Is a common question and so forth. And a lot of people think, oh, I have to be very outgoing or I have to be a salesperson and so forth. So, I kind of just want to take that stereotype and, nip it in the butt a little bit because I know I'm not a big salesperson. I don't know if, either the two of you are, but I was just curious, what was your secret sauce?
Yeah, I mean, if there was a secret sauce, but really all I ever did was just talk to people about what I'm doing.
Yeah.
Like, hey, I'm doing this, I'm doing that. Here's what I'm learning.
Mm-hmm.
And then I've always found that like people come to me. They're like, oh, that's interesting. How can I get involved in that?
Mm-hmm.
So,
Right.
my, I don't even want to call it like marketing to investors. I think that should be very pull versus push. Like you just talk about what you're doing and they should come to you. Because really, if you think about it, right?
Mm-hmm.
If you're going to somebody and you're like trying to convince them to work with you as an investor and they're unsure, but you're like a really good salesperson and you push them over the edge and now they're in, like that's a bad situation because the notes business is wild and every deal like has its swings, right? And you may have little bumps to the road that aren't even really problems, but if you're working with an investor, no matter how that investment is structured, it needs to really be a partnership and you guys need to be on the same page. It's not quite as far as getting married, but it's so you want them, they have to be like fully all in, like on their own. If they're not, you're begging for problems. Like they're gonna freak out about things that aren't even really problems. They're gonna become high maintenance. And then fortunately that's one thing I've been like really lucky. I've had like good success with JV partners. And like, I've had ones where I've had to deliver bad news and I'm like, oh man, this is going to be a tough conversation. And everyone's like really been pros. I've had a few that have scrubbed out before we did the deal. Cause I could tell by like the way things were heading. I'm like, oh, this guy's gonna be a major pain in the butt. If I don't nip this in the butt now, I'm going to totally regret it.
Yeah. And yeah, I would just quickly piggyback on that and say very similar. I think, what I was doing in the beginning was essentially just documenting my progress, right? Or if I was researching a particular topic, put it out there for other people, right? So it wasn't so much, I wasn't thinking of it as content creation per se. It was just documenting what I was doing. And then I had, it was one of my first JV partners was a guy I played lacrosse with many years ago in college. I had no clue he was even following what I was doing. It was just, he reached out to me on LinkedIn and said, basically he wanted to do a JV deal. I'm like, oh, okay. So similar thing where he was reaching out to me. I think sometimes I need to be a little more pushy actually, but if people, it's really a matter of building trust is what it boils down to. You just, people get a sense with our podcast and videos and different things, whether or not they can trust you. And then if you communicate through the deal well, like you were talking about, Dan, I have a couple deals now that are a little, touch and go that are still JV deals, that because I've been communicating and they've seen the work I've been putting in, they're fine. I mean, the JV partner obviously wants to make as much money as possible, but they see that it is what it is. I can't control everything. So I think just building trust in, and then communicating are key for marketing and finding outside capital.
Yeah, communication is huge. I've had like so many stories where I've talked to people and they're like, yeah, I was working with this person or that person and they won't email me back. Like I can't get a hold of them. That is so scary. Like in some of those cases, like person's like the operator's doing the job.
Yeah.
But if you're not communicating, even if you're doing your job really well, they're going to get really scared. Like that's really creepy if you're on the other side of that.
So one thing I wanted to jump back at, because it's very difficult to do when you're getting started, and you touched upon it, Dan, is, you've created kind of an influence on people who are interested in investing, and then you're raising some money, and then you got that person who's going to be a pain in the ass, and going back and telling them no, because when you get started, it's like, oh my God, this is awesome, I will take anybody. And then all of a sudden you realize, oh man, after you have the first pain in the ass, then all of a sudden you realize like, okay, I don't want to deal with that anymore. And I've had people with significant six figures, essentially I pushed aside because I just knew that I just would not be able to handle them. And they went to there were things they wanted that were just like over reporting and certain things, and sign up with this and that and so forth. And I'm like, look, go do a background check, go do this, go do that, whatever you want and so forth. Here's 50 people you can go talk to. And I just got the sense from working with this person early on that the moment they sent me money, it's going to be like, if the dividend wasn't there on the 1st, and the 1st is a Sunday, like that Monday morning, I'll get this email like, where's my money? And it's like, so.
Yeah, I've had the same thing, right? And that's where it gets back to like, it's a partnership. So I set the expectations of like, here's how I do things, here's the communication cadence.
Yeah.
But yeah, I've had a few of those people where they want these like elaborate contracts where it's like, okay, Dan, you're going to work for me. You're going to do this thing on this day, and you're going to do this thing then. And if you don't, it's a problem. And it's like, no, you're not hiring me. Like, it's a partnership.
Yeah.
Right. And if you don't trust me to do it, then that's not bad. Because we've all seen like bad actors in the industry. If somebody's a bad actor, I don't care what's in your agreement, like you're going to have a problem. So why are you worried about that?
It's true. And I think it gets to the abundance mindset is, Chris, we turned down somebody who had significant capital for our fund, but there's other money out there. So, so like you said, Dan, you've realized there's a lot of capital waiting for home. So that's, you're providing value to that person. And that's, I think in the beginning, it's like, you're trying to, you're so starved for that capital. You don't realize how much value you're providing to that either passive or partner or whatever you want to call it, the money partner.
Yeah.
So,
yeah, I mean, and there is a lot of, it's been like this for several years, but yeah, there's an exorbitant amount of cash on the sidelines. And, and then you look at the stock market, which is great, but like very volatile. The bond market, like interest rates are still super low. So if you look at what you can get in notes, even if it's like a high single digit rate, like considering like the equity coverage and things you have from it, like risk reward wise, it's pretty nice. Yeah.
Yep. I agree.
My phone just beeped me to say stocks drift as the 10-year treasury yield now sits at 2%. But yeah, I think we're in for, Dan. Yeah, I think we're in for a little bit of a hurt on the stock market based off of, the reports yesterday that they're thinking that we'll probably do a full point jump at the next Fed meeting. I think I was reading, or a quarter. No, instead of a quarter, they're going to go a half for the next 2 quarterly meetings to get the interest rate up a little.
Inflation was 7.5 yesterday, right? The formal.
Yeah. And that's the inflation's an interesting one too, because I was reading a Wall Street Journal article the other day. If you look at, they've got the 10-year treasuries, and then they've got those inflation protected ones, the tips. So some people can like look at the spread to see, and the market's thinking inflation is going to settle back down based on the way that those are priced. So we'll see. Hopefully that's true.
Well, where do you see specifically the note space going in the next couple of years? I get this question and I'm always a little hesitant. So I get it. Nobody has a crystal ball, but I'm just curious, inventory wise, pricing wise, what do you see for the next couple of years?
Yeah, I'll give you my prediction, and with the caveat that like my predictions the last few years have been pretty off the mark. Like especially when COVID hit, like I thought, oh no, my portfolio is going to go to crap. Like real estate prices are going to drop, and then like the opposite of everything I expected happened. But for a while now, I've been waiting for like the next wave of foreclosures. With COVID, I had all of the moratoriums, and so there is this like backlog in the system that at some point will wash out. I don't know when. I was kind of hoping it would start now. I don't know that I've really seen it quite yet. I think pricing will continue to stay probably around where it is. Like it was interesting when I started 5 years ago, I saw people like complaining that pricing was too high because they were anchored on like 5 years before, like right after the financial crisis.
Mm-hmm.
And then now, like a lot of people are like, oh, this is too high because they're anchored on like what the pricing was
Mm-hmm.
from 2017. But like
Mhm.
having had experience, actually, we were just chatting before we hit record. Like if I go back in time a few years, I would have bought way more stuff and would have been
Yeah.
willing to pay more. Like I
Right.
didn't realize how good that pricing was. So I don't know that it's necessarily going to go up from where it is now, but I don't know that it's necessarily going to like
Mhm.
drop to some of those incredible deals that you could get.
So maybe more of the same, and maybe an uptick in inventory.
That's what
I
I
think
would expect.
yeah.
What
I
Yeah,
about,
agree
because the
with
other
that.
thing too, right, is the housing prices have run so hard
Mhm.
the last few years. Like that really changes the equation too, right? When pricing was lower, there were a lot more upside down borrowers.
Yeah.
Now those things have a lot of equity, and that just changes the value fundamentally.
yeah, and I think you'll
Yep.
see more bankruptcies versus foreclosures as inflation increases, and if people can't afford payments. I've mentioned this to Jamie in the past, and back when we started, I use the analogy, we were farmers and now we're hunters, because previously, you basically, drop a few seeds or make a few emails and calls, and then poof, it grows, and you have these notes every week just sent to you. And, you'd have so many notes, you didn't even know what to do. Like you couldn't even look at half all the tapes you were getting 5 years ago. Today, it's like, a drought. So you literally have to go, that's why I use the term hunter. You got to go out and really search for the tapes today. And that's where I think a lot of people complain about inventory, because people are caught up in what it used to be like 4 or 5 years ago, where you didn't have to do anything, just get on an email list. And today, being on an email list doesn't cut it, unless you want to pay ridiculous pricing. You do have to go out and really, work it. Would you agree?
Yeah, definitely. I mean, and that's one thing that's changed in my business. Like I used to have much stricter filters when I went through a tape. I'm like, okay, my model is like here.
Mhm.
And nowadays, it's helpful to have just a better understanding of how the process works and the deal flow and how to determine value. So you more look at each deal and say, okay, what would I need to buy this at
Mhm.
to make this work? So yeah, there's more flexibility. You can't, yeah, it's not quite as cookie cutter
You're not going to
as it
pigeonhole
was.
yourself in like, I'm only doing these states right now, because you have the
Right.
experience, and say, hey, look, I got a good attorney in the state. I understand the state. It's not my A+ breadbasket, but if I can get it for this price, it's worth the risk financial reward to take a look at that asset, is kind of what I think you're saying. Is that correct?
Yeah, exactly. Like everything has some value, except for those like some notes that are so upside down, they might be worth zero. But
Yeah.
yeah,
I've got one that I know very well that I've been talking with, and I mentioned to Jimmy a few times that my attorney finally got back to me yesterday, and like, if they actually gave this to you, I don't think you would even want it. They're like, they'd have to actually pay you to take this.
yeah. I haven't had any of those yet, but yeah.
So, but that's the
Yeah.
one, Jamie, in Pennsylvania. It's on 3 different lots.
Gotcha.
Yeah. So.
Yeah. I was talking to somebody yesterday about this topic, and the same thing you just said, Dan, was essentially expand your buy box. We've had to. I mean, as far as I've been in notes shorter than you, shorter time period than you two have a little bit, but even in that time period, my buy box has expanded, partially because my confidence has grown and my experience level has grown, but also because of the lack of deal flow. So I used to tell new note investors, yeah, pick three states that you're comfortable with. Now I'm saying maybe 8 to 10, because we want you to actually do a deal. Don't pick 50, but and like, we've talked, Chris, you each deal still needs to cater to some of your strengths, but you got to push yourself a little bit and get a little bit uncomfortable, I think, in order to have access to more deals. So yeah, I'm curious, Dan, where do you see your note career going? I mean, not so much the market, but your personal business and your note investing situation. Where do you see that in 3 years, say?
Yeah, my plan is just to steadily grow it,
Okay.
and just keep going incrementally at a
Yeah, I
time.
like it.
I'm not going to necessarily try to double it overnight unless there's some like really cool opportunity that comes out, but just I think it's continuing to run it effectively and efficiently on a day-to-day basis, and then just opportunistically add to the portfolio
I like that. It's
as I go along. Yeah.
So,
yeah.
question I want to ask is, what is the one thing somebody new to space should not do? Now, I know there's many, but what's the
Yeah,
one thing you
there's
see a lot of people doing, and you just like, want to rip your hair out, be like, oh my God, why are you doing that and stuff? Is there one thing you can think of off the top of your head?
yeah, I would say don't take like everything you hear in the business at like face value. Like be reasonably skeptical. Don't be like fearful and just like never pull the trigger on everything, but just like sanity check all the information
Mhm.
that you find. Like if something sounds like super good to be true,
Mhm.
talk to some other people, because it's an awesome business, and it's really really, I think the way you build a business is you're kind of like building a snowball over time, right? These things like gained steam, and it was like earlier last year, I had this series of months where I just had all these like big exits, like one after another.
Mhm.
And all of a sudden, from like a profit perspective, my business just
Yeah.
took off. And then I was like, well, hey, wait a minute. I did that deal like 3 years previous. I did that deal 2 years
Mhm.
previous. So just understand that like when you do these deals, a lot of times the money shows up much later.
Yeah.
It could be years
Yeah.
later in some cases. So just be like a little skeptical. Somebody's saying, hey, you can make
Mhm.
boatloads of money like in the next month. It's not that. You can
Mhm.
make boatloads of money. It's just your time
Mhm.
horizon is going to be years.
You got the COVID refinance as well, I can see. So once COVID hit,
Yeah.
interest rate all of a sudden values go up, interest rates were low. I had the same thing. Like people were asking because of COVID. Yes, it delayed a lot of foreclosures, but actually from a returns perspective, my returns were better because I had people who I never thought would pay off start refinancing, paying off loans. And it's like, woohoo. So
Yeah. And I haven't had foreclosures during COVID. Like, some of the counties were still
yeah,
open.
the non-judicial ones, I had a few.
Yeah. One was in Tennessee.
Yeah.
I had one that was in Nebraska.
Mhm.
Yeah.
So I had one in Maryland, which is quasi judicial, that we foreclosed in October, I think, of 2020. And we finally, just like a month ago, got the courts to ratify the sale. And it's actually going to be closing next week. So it's been, a year and I mean, it sold at auction to a third party. So this guy's just been waiting for a year and a half to basically be like, when's the court's going to do this so I can get it? Now he's going to actually have to unfortunately evict the borrower or the person in the property, which will be another 6 months in this county in Maryland. But it's just like, you get it sold and you're like, yeah, I'm going to get my money. And then like a year and a half later, you still don't have it. So these are some of the things that just people should be aware of.
So
Yeah.
Dan,
Sometimes I get paid right away. Other times, yeah, it takes a while.
Yeah.
you never know.
Mhm.
So we didn't prep you for this, but this is the Good Deeds Note Investing podcast. Can you think of any kind of good deed that you've done or has happened through your business that someone else has benefited from?
Yeah. The biggest thing I've noticed is, a lot of it's going through that like monthly report and reaching out to borrowers. And I've been doing it increasingly through the servicers for a while. I was just doing a lot of it myself.
Mhm.
And I've had a lot of loans that were non-performing. And it turned out that the borrower like wanted to get things on track, but the loan was owned by a larger institution and they couldn't get anybody on the phone and it was
Mhm.
confusing.
Mm-hmm.
And then when they talked to me, it's like, oh, okay, we can do this, we can do that. And they're like very grateful. And so I've had a lot of loans that were non-performing and I bought them and like one phone call to the borrower. And then we get like an agreement in place to get it back on track. And all of a sudden, like it flips to a performing note overnight, which is awesome for me.
Yeah.
But it's also awesome for the borrower because that's causing a lot of stress to them.
Mhm.
When they have this loan, it's like, well, I don't know if I should send payments because I don't want to get foreclosed on, but I'm willing to send payments, but I can't talk to anybody. And so when you can remove like a lot of that stress, that's, really awesome for them. And they're like very appreciative. I could make a lot of borrower testimonials. I've never done that.
That's a good idea. I like that. Yeah, there's the human element there to every, we talk about every note has the math side and then the human side or a story. So that's pretty cool. I've enjoyed that part myself. Yeah.
Yeah. And it just shows the show, right? Like as an individual investor, like, you know, in any investment or any business, you want to understand like, okay, what's your edge? Like, what's your
Mhm.
competitive advantage?
Yeah.
And it notes a lot of it is just the ability to pay attention to your
Mhm.
portfolio, because it's kind of
Mhm.
scary what I've seen like some of these like larger funds
Yeah.
neglect and do.
Well, that's, I try to think of it as, you know, and I'm not the one who came up with this, but your note business boils down to deal acquisition and money acquisition, like we spent some time talking about today. And then the third piece is asset management. And that's the piece you're talking about, where these larger hedge funds and maybe banks just don't don't do the best job on an individual level, managing those assets. So that makes sense.
Yeah, because there's buying at the right price. And then kind of the
Right.
next question is like, what can you do to add value
Right.
to the asset? Just like
Absolutely.
if somebody like acquires a business, like usually part of that model is, okay, what can I do to
Mhm.
add value? There are cases where you can do a similar thing
One of the
to
things
it
that
now.
I was thinking of the other day too is when you look at some of these other funds and so forth, you know, the fund managers at the top are, you know, well paid, very highly educated, you know, probably MBA type people and so forth and so on. And then when you get to like, you know, our level, you look at, I know, Dan, I think you got an MBA.
Mhm.
You know, we all got advanced degrees, and we're acting as a role of probably people who, if you took, I'd say, our W-2 jobs, probably making a third of what we probably make in our W-2 job. So it's almost as if you took a large fund and had that fund manager managing every asset. That's kind of how it is with us. So we can think outside. And again, I'm not trying to, you know, say anything about our egos and stuff, but you know, you as a product manager, you've, I know, probably been in a lot of situations where you got to figure some shit out. And it's
Mhm.
like, okay, how do I do this? And that's what note investing is coming up with creative solutions, how to get through things. And it's a lot of times people who might be working these loans are more just trained on, okay, here are the laws, what I can say and I can't say, but they have no idea that, okay, well, if I modify this borrower, am I better to modify them over 4 years, or I do it 3 years with a balloon, or do I just run it out for 6 years? Like, what's that scenario look like and so forth? They'd have no clue if you ask them that. And for most part, you know, I'm sure you can do it. I know Jamie can do it. And that's where I think for us, it gives us that competitive advantage over some of these really large funds because of the amount of, you know, involvement we have. And you got to have that fine balance of working on your business, but in your business. But a lot of times once you go through that, when you start your business, that comes so naturally now that you can like, oh, this is what I need to do because I've ran that scenario 37 times already.
Yeah, I mean, there were a lot of things early on, right? Like I would spend hours crunching numbers and figuring things out. But nowadays, especially like pricing in some cases, I can just, you know, after you've done a bunch, there's a lot of stuff you can just do back of the napkin.
Do
Because
you
you're
use
like,
your
I've done
calculator
this so
anymore?
many times. What's
Do
that?
you use your calculator anymore?
I mean, I use Excel. Like I've got
Yeah.
some spreadsheets that I plug things
But
into to check. But like a lot of
yeah.
times as I'm going through a tape, I can kind of go like, okay, here's the balance, here's the term, here's the interest rate. Yeah, I'm gonna need to be here, that kind of
Yeah,
thing.
exactly. It's like, you know, when you started out, it's like, oh my God, you put everything into your Excel and so forth into the calculator. And it's like, okay, this is where I need to be now because you've bid on probably 1,000 assets in Tennessee with a UPB of 55,000, properties worth 75,000, the payment's $500 a month. And it's non-performing. It's like, okay, yeah, I could be back in the day, I'd probably be at 25, 30. Maybe today I'm at 35 grand, but you're probably in that range somewhere of probably 30, 35 grand. And that's like, okay, let me just stick it in my calculator, kind of see where it plugs in at. But you already know where that starting point probably is. And you know what is the the approximate range of what it should be.
Yeah, and I've done a lot of contract for deeds as well. And so
Yeah.
most of those have like the same terms. So those get
Yeah.
like even easier to do.
That's true. But no, I think people get so wrapped up, and it's fine when you're brand new, but so wrapped up in XIRR, IRR yield. That's fine. We can debate that all day, but you know, it's fun. But at the end of the day, it's wrong as soon as you buy the deal anyway. So I just think it's part of the process. But once you get going and you're looking at maybe 5 or 10 assets at the same time to buy, it's not a good use of your time to be spending, you know, hours plugging in those numbers, in my
Yeah,
opinion.
there's just so much variation deal to
Yeah.
deal. Like
Yeah.
you can't be precise. And you know,
Mhm.
for people that are brand new and buying their new one, I would say like definitely take your time, figure out what you're doing, but don't necessarily sweat like optimizing all the pricing on the first one. Because the other thing that was eye-opening for me when I bought the new note was just how the whole process worked. And I was used to stocks where like you click a button and the trade on E-Trade and like the trade is on. I'm like, wow, why is this taking weeks to get this transferred? So like there's a big learning process just from like going through that whole end to end of buying a note. So, you know, don't overpay for stuff, but like you don't necessarily have to like crazily optimize the very first one, because if you do that too much, it's going to delay you getting into a deal and then learning all those other things.
What I like to have people look at is not as much how much you're going to make, what's the risk? If I pay 25 grand on this note, as an example, how much cost based on, okay, here's kind of what's going to happen, but how much money is there to protect me in case something goes wrong, it takes longer or whatnot? You know, if the foreclosure goes from 5 to 10 grand, you know, is that a problem? Do I still make money? Do I not? Because I think that's one of the things people miss the most is everyone is so kind of, you know, returns based on, oh, I'm going to make this percent or that percent. Like Jamie said, it's wrong the first time you look at it. What's the risk involved with getting that percent? You know, I see people posting, you know, syndications for a multifamily deal, hey, 20%. And I'm like, okay, what's the risk on that? Because it's probably in Podunk, Iowa somewhere, in a Class C neighborhood that they're going to try and renovate from that perspective. Or would I rather get 8% on a Class A apartment building in Nashville, Tennessee that is booming? So, you know, people I think miss the boat on that, and they're chasing the money versus, you know, looking back and understanding the risk with it as well.
Yeah, that's a good point. Because the other thing that'll happen, right, if you're obsessed with getting what I call like novelty returns, because I think the other thing is people talk about deals they did in like 2013.
Yeah.
And they're like, oh, I got to get, you know, 50% ROI or it's no good. Like if you're new and you go through and you say, okay, I'm not going to buy a deal unless I get like a 30% annual return, then what's going to happen is you're either going to buy nothing or you're going to have missed something and you're going to buy some crappy asset and it's not going to work out well. Like it's very rare that you're going to find like the $20 bill laying on the sidewalk. Like if that's what you're trying to do, especially in this environment, like you're going to be looking for a long time or you're going to mess up. And, you know.
Right. That's a good point. So curious, you mentioned maybe you overpaid a little bit, you know, previously, but when you look back at the 5 years you've been in notes, what would you say is something you would change, something you would say is your biggest mistake so far?
Yeah, I'm hesitant to say this, but I think like if I had it to do over, like knowing how the market's gone, like I would have bought more earlier. Like my ramp up was probably faster than most, not nearly as fast as like you and Chris, but
no one's
not
as
bad.
fast as Chris.
But I should have, yeah, it would have been nice to have been like on the Chris plan of buying faster, because I just would have done better. But you don't know what you don't know. Yeah.
Jamie thought I was nuts. He's like, oh my God, you're going too fast. You're, you know, blowing through this and so forth. And now he's probably like, God damn it.
Thought you put that in past tense? I still think you're a little bit nuts.
So, well, it's funny. I was mentioning last night in my membership group that, you know, certain things, like somebody throws a note at me, I can make a decision on that asset in like seconds, like yep or no. Yeah. But if you ask me like to go buy a car, like I joke that I will do so much research that by the time that I get to the finish line, it's a new model year and I have to start all over. You know, it's that repetitive, component.
I try not to do that. Yeah, and I think a lot of these things, right, like they're numbers games, and I kind of know like a certain percentage are going to go sideways, a certain percentage are going to be home runs, and like the vast majority are going to be like solid base hits.
Yep.
And so if you're doing a bunch and you have a lot of experience in that, then when you do like have you become not as concerned.
I think the other thing that, at least for me, is like I don't, by the end of the day, I don't have the brain power to figure out what's for dinner, you know, like so it's like you know, Chris, you're probably so focused on your day job and your notes that, you know, a car it's like you may have been tapped out of your mental capacity.
No, there's certain things I'm just, you know, if like notes, I know notes and I understand it. If it's
Yeah.
an area that I don't have the confidence or education in, I try and educate myself, like be a master at some of the other things I'm really good at. So I end up like overkill. It's such an overkill. And that's the engineer in me,
Yeah.
coming out from that
Right.
perspective. So.
Yeah.
Yeah.
Well, as we wrap up, Dan, we like to also ask people kind of a note and bolt, kind of a little tidbit of, information that, kind of lessons learned or just something in general in the note space that people can walk away with. Do you have anything? Or if you need a minute to think, I'll go over to Jamie over here and have him come up with his. And if he doesn't have one, I'll start with mine.
I can go first if you want.
Okay.
It's up to you, Dan.
Sure.
I mean, we already talked about it. It's kind of cheating, but my note and bold is for the new note investor to think 2 to 3 years ahead and document your processes. I'm not even talking marketing. I'm talking your internal SOPs, like we talked about. It's really easy not to do this. So document whether you're using Loom or Dan's processes he talked about. Just document, because you're going to want to. It just makes it so much easier to systematize. So just think about where your business is going to be in 2 to 3 years internally, as opposed to just focusing on working the deal that's right in front of you. Easier said than done, but it's pretty key.
Yeah, and I think my tidbit is, if you're like in that mode where you're in the learning phase, you're listening to stuff and you're like, oh God, there's all this information and I don't know how it's organized. Like, start breaking it down. Like, go, okay, here's a video, or here's a bigger pockets post about pricing, or I've got like due diligence or legal process. And so, like, create yourself like some bookmarks and kind of organize those.
Yeah.
And that makes it a little bit easier to go back and
That's good.
reference things, because otherwise you can really get lost
Well,
in a sea of information.
Chris uses the analogy of, the saying of how do you eat an elephant one bite at a time, because it can seem overwhelming if you're looking at the big picture all the time. But yeah, that makes a lot of sense. Just bite-sized chunks. Okay, now I understand that part of it. Incrementally grow.
Mine is going to touch base on something Dan mentioned as well, that if you want to get in this business and start managing a business, you have to treat your financials serious and understand that you need to do your books. You need to know where you stand on your books. If you look at most companies or people who get themselves in trouble, it's because they have no idea what's going on with their books. And if you're looking to invest with somebody in this space, the 2 questions I'd ask them are, send me a copy of the last report that you sent to an investor and just black out the names that are in it so you can see the type of report. And then ask them to send you a sample financial report that they have. Because if they can't produce either one, then run for the hills. From that perspective, because everyone can sit there and say, oh yeah, I provide this quarterly report. I do quarterly financials. I do this, I do that. It's like, great, you say that. Okay. So give me an example. Show me one, show me an example of a quarterly report or a monthly report that you send to an investor. Show me a sample, balance sheet and P&L of one asset, and you can black out the asset's name. I just want to see how it's done in your books, because at the end of the day, if the JV deal's done, how do I know I got the right amount of money? And if if you can't show me that doesn't give me a lot of, confidence that the person actually manages their business properly.
Yeah, that's good advice. Yeah, because anybody who's doing that, right, like, they're going to have piles of those things. And I'm like, oh, let me take 5 seconds and get that to you.
Right.
But if they're not, they're going to be like,
Right.
Yeah,
that's a good point.
It's literally something they should be able to email in 5 minutes and basically go in, just black out the thing and say, okay, here's the one that I sent for end of year December, or here's a sample of a quarterly one. I'll send them to like, yeah.
It's a good one. You want to take us out, Chris?
Yeah. Well, Dan, thank you for joining us today. How can people reach out to you if people want more information about you, your company, your podcast, where they can listen?
Yeah. So our website is fusionnotes.com, or you can just search the Note Investor podcast on iTunes or anything else. Or my email is just dan@fusionnotes.com if anybody wants to reach out directly.
Nope. Dan, thanks for having you on today. And as always, for our listeners, thanks for listening. Make sure to leave us a review on your favorite listening station and go out and do some good deeds. Thank you all.